Up next is a topic that plays a pivotal role in the world of BFSI. We're talking about the I of BFSI, that is insurance. With less than 60 insurance companies and less than 10% coverage, it is an arduous journey ahead of India to get 100% insurance coverage by 2047. What do the leading insurance companies see as their priorities now, their road ahead, and their individual goals? To throw more light on this important issue, let me now invite Ms. Vishakha RM, MD and CEO, IndiaFirst Life Insurance Company. Please join me in welcoming her up.
Good afternoon. Okay, thanks. That was a mic check and to make sure that somebody is listening. Hi, everyone. I think slight change. We're supposed to get onto the panel, and then they decided that maybe we should have a 10-minute of a prep on what exactly is insurance before we jump into what is universal coverage and what are the challenges of universal coverage. I was at a Bloomberg event a couple of days back, and one of the things that I had to say, which I was given to understand that not more than 2% of the audience knew, made me believe that we still have such a long way to go in educating people on insurance and the benefits of insurance and what exactly the product of insurance stands for in the BFSI space, even amongst the non-universal coverage, even amongst people like you and me. So I just thought I will use this opportunity presented to me by Effie. Thank you very much for that. And talk about very crisp introduction points. First of all, I think all of us look at insurance as a risk management product, right? Of late, we've now been having debates saying, okay, we concede term plan may be necessary, but why do you need endowments, why do you need ULIPs, and why do you need non-par products? With me so far? I think we've moved that distance from saying what is insurance, why insurance. We've now said, okay, fine, maybe term plans in life insurance are okay, but why the rest? And towards which I wanted to talk about the risks that life insurance covers. And when we're talking about the risks that life insurance covers, when we talk about term plans covers only one aspect, which is mortality, which is dying too early. We are in a period where we're all living too long. If we all lived long enough where we had enough money that's working for us, we would all be happy. But the reality is that we need to make money work for us. Many of us in our official capacity do something called an ALM as a part of the job, right? And asset liability management for your companies. Many of you are familiar with, either you're supervising it or you've got a colleague who's doing it or you're developing software to do it. How many of us apply that same asset liability management to our personal lives? There was a point where all our jobs used to be public sector. Many of them used to be government. Many of them used to have pensions, which is not the reality anymore. And in this case, in this day and age, an asset liability management for an individual is as equally important as that for a company. And life insurance plans work towards that because life insurance plans are the only long-term guaranteed plans available in the country, in the world, dare I say. If you take an annuity product from a life insurance company, how many of you, and I would love a show of hands, how many of you are aware that life insurance contracts cannot be cancelled? No hands up? 2? Thank you. So basically, this is to say that if once a guarantee is promised, that guarantee has to be delivered, there is not a call option. And that is very unique only to LI companies. Mutual funds can cancel their contracts and shift you to another fund or ask you to take your money back. Banks can do that, but life insurance companies cannot do that. So that's the long-term guarantee, and that's the capital required to be able to provide that long-term guarantee. When comparisons are made between life insurance returns and a fixed deposit returns and mutual fund returns, I mean, it's not even apples and oranges. It's probably comparing different categories altogether while under the same basket because they're all different. Life insurance products typically looking at mortality, morbidity, longevity, and financial risks. There is no product that has market volatility. How many of us would be happy? And I'm not talking about the room here. I don't know, each of you well enough. But if I was to look at an average person, the risk appetite for most average people is they don't want to lose money at 60. They're happy to lose money when they're 30s, 35s because they know that there'll be an opportunity to make it back. They don't want to lose money at 60, 65. Whatever you've earned all your life is not something you want to lose. And for people who have only their retirement income as something that they need to live off for the next 25, 30 years, the only product that is not volatile, not market linked, not subject to fluctuation are your life insurance products. And I genuinely believe that there is no appreciation, even amongst intelligent, educated people like all of us here, to understand the nuances of the product and to understand and be goodwill ambassadors of the product. You want high returns, high risk, please go ahead. Pick up the equity markets, pick up mutual funds, pick up maybe derivatives, pick up crypto, depending on your risk appetite. Please go ahead and do it. But for people who don't have high risk appetite, I think it would be a duty when we actually tell people, low risk, low return, this is what you will get. And that's one of the points that I really wanted to leave behind, is the fact that there is no call option in products. The product is not only mortality, morbidity, but it's also longevity and financial volatility. I think these are all the risks that get covered. Yes, however, we are a country where, policemen need to patrol the beaches to prevent youngsters from going into the ocean in a cyclonic storm warning. And that picture, I don't know if all of you saw it, of these 4 boys who were swept away on I think, the Juhu beach. And then you had policemen patrolling the beach to prevent people from going into the water. That's where we are. I don't understand. We need to be fined to wear helmets. We need to be fined to wear seat belts. We've had high-profile deaths because people don't wear seat belts in the back seat. And in that environment, in that entire environment, what we can do is truly understand what insurance is all about. Why is the I there in the BFSI? And I'm not getting into data. I'm not getting into statistics. I find it a huge challenge these days to speak, because I want to speak about something that's not available either through ChatGPT or through Google or whatever. And I'm saying, okay, if they go and type the same question there, will they get this answer? And I'm like, okay, I don't want to give an answer which ChatGPT can give. And so what I'm sharing here are personal views based on experience. I've spent 35 years in insurance. I've been working since 1987 in insurance. I've settled dozens, not just dozens, I think hundreds of claims. I've seen the impact that these make. I think some of you, if you were unfortunate enough, had experienced it with the recent pandemic, and you've seen families with insurance, families without insurance. And my appeal here, as I make my opening remarks, is simply to say, insurance has a place in the BFSI. It is a risk management product. It is a product with no call options, and it's a product that offers risks against multiple risks, including financial volatility. And that's just a precursor that I wanted to share. Thank you very much.